Good evening, dear friends. It's Sunday evening, the 17th of August 2025, and here's your weekly summary of what's been going on in the markets. My name is Clive Thompson, and I'm really grateful that you're all tuned in. So we're just getting breaking news as I write this, as I speak this. We've heard that allegedly Putin has agreed to what they call Article 5-like security guarantees for Ukraine, which is basically NATO-style protection. Now, if you think I'm on the vodka, no. This is being widely reported by all the major news sites. At least this is being reported by Steve Witkoff, the US Special Envoy, saying that Mr. Putin has agreed to that. Now, whether Mr. Witkoff's on the vodka or not, or Mr. Putin is, we don't know, but that's what's being widely reported. What else went wrong last week, or right? Well, stock markets had a very good start to the week, hitting all-time records across the board. On the week, the Dow Jones gained 1.7%, and the big technology stocks continued their advance, at least for the first half of the week, and then stock markets fell back a little bit at the end of the week. But we've made a new milestone here. The top 10 stocks in the USA now represent 40% of the S&P 500. So what's the consequence of that? It means that if you blindly think that it's a great idea to buy an ETF linked to the S&P 500 or the World Index or something like that, assuming it's a market cap index, and almost all of them are, you're going to end up owning a very large percentage of these top 10 companies. In other words, 40% of your investment will be in just 10 companies. And the point I'm trying to make here is that these 10 companies, their share prices are being driven higher and higher by people putting money into the ETFs, because they look at the ETFs and say, my God, I've done really well. These ETFs have gone up and up and up year after year. I can't go wrong. I don't have to pick stocks. Anyway, I wouldn't pick NVIDIA. It's too highly priced, and all these other tech stocks are too high priced. I'll pick the ETF. So you put your money into the ETF, and the ETF manager has no choice but to buy exactly the same stocks that you think are overpriced, driving the stocks higher. Now, of course, this could continue for a long time. We've got this huge wall of money which constantly is hitting Wall Street, trying to find a way to go into anything other than cash. People are kind of nervous about dollars and nervous about cash. So if they sell something, they're going to buy something, and it's probably not going to be another, not going to go into dollar cash. And the dollar, by the way, is falling. We're down on the dollar X index, the DXY, to 97.71. That's come off for about 110, 108 at the start of the year. Gold held up very well in the week, staying very strong at around $3,360. It's up 24.9% this year alone. Silver also doing well and holding up very strongly at $38.01 on the spot price, and the gold to silver ratio is 88:1. That means it takes 88 ounces of silver to buy 1 ounce of gold. The ratio has been above 100 recently, earlier this year, and if we go back in much longer in time, the ratio was more like 15 or 20.
From NY Times, live update. Trump officials hint at possible concessions by Putin, but give no details.
Well, I don't know if you just heard that. That was a headline coming in that Mr. Putin's camp is hinting at concessions to Trump. We'll see what that's all about. The bad news this week, if there was bad news, was the inflation number. The Producer Price Index, which is a forerunner, it's a leading indicator to the Consumer Price Index. The Producer Price Index rose by 0.9% on the month. Now you can work out what that is times 12. It's a lot. It's nearly 8% or 9% a year. Well, a bit more than that actually, about 10% a year. So obviously it's not going to go up 0.9% every month, I suppose, but it is a forerunner to the Consumer Price Index, or a leading indicator, because producer prices sooner or later feed their way through to consumer prices. So how much did it rise? It rose 0.9%. People were only expecting a rise of 0.3%. So this is perhaps an early indicator that the Trump tariffs which have been imposed are starting to have an effect. They're starting to feed their way through to the producers who are importing goods, and those producers will sooner or later pass on that increased cost to the retailers, and the consumers will bear the brunt down the line. So on that news, which was on Wednesday, there was a bit of a sell-off in the stock market. It wasn't big, but it came off its top. Also, as a consequence, bond yields started to rise. So we saw that the US 10-year yield rose from, I think it was around 4.18 last week. It's up to 4.32 now. That was the figure on Thursday. It's about the same today. The talks between Mr. Putin and Mr. Trump started on Friday evening. It was a 3-hour-long meeting. It started 1 hour before the markets closed, and we didn't hear anything about it during the market. It looked at the end of the meeting like nothing had been agreed, except that Mr. Trump will meet Mr. Zelenskyy of Ukraine on Monday at the White House. So initially the thoughts were this meeting was a bit of a disaster, but obviously with the news coming in that maybe Mr. Putin is making some concessions and possibly agreeing to NATO guarantees for Ukraine, unbelievable as it sounds, obviously the markets might well celebrate that on Monday. It takes away some of the geopolitical concerns if it is true. So obviously, whilst there was a little bit of sector rotation in the week and some kind of move overall from high-flying technology stocks into the value-based stocks, the high-flying stocks, some of them, the main ones, continued to rise on the week. So we had NVIDIA up on the week, 1.8%, Microsoft up 2.1%, Apple up 1.2%, and Amazon up 0.8%. But others were down a little, which kind of meant that money's slightly slipping out of the technology sector, but it's no big deal as we speak. There's a bit of a crisis going on in the UK bond market. The 10-year gilt yield reached, I see on my screen at the moment, that must be the last price in the futures last night, on Friday night, 4.7% for the 10-year. That's the highest yield in decades on the 10-year. The 30-year is at a much higher yield. It's 5.57%. So why are bond yields selling in the UK? Well, two things. Well, firstly, they've got inflation concerns, and secondly, but more importantly, there are serious concerns about government finances. They've been raising taxes. The wealthiest people, or slews of very wealthy people, have been leaving the country, reducing. So raising the taxes might have helped the huge number of people leaving the country to look for better tax situations elsewhere, mainly in the United States, does mean that the country's actually losing its tax take. And of course, they are finding that their spending is going up and up and up, which means that the deficit is rising, the debt is rising, and people are concerned about continuing to fund the government at the old interest rates. In other words, investors are asking for higher yields or they won't buy the gilts. And that's why these gilt yields are rising. During the week, we saw the dollar drop. The DXY, which is an index, a dollar index of multiple currencies, but it reflects the value of the dollar overall. It dropped about nearly 0.5% on Friday, down 0.4 on Friday. So it's down to 97.84. And that's basically probably driven by the rather poor inflation news. Elsewhere in the precious metals, we saw that palladium fell 14.79% in a month, but platinum has held up fairly well. Palladium is falling due to reduced demand in the auto market, and you'd have thought that would affect platinum too, but everything I read says that platinum is the metal which is more likely to be used in the hybrid cars going forward. So maybe platinum is going to somehow hold up. Oil was stable despite the geopolitical tensions last week. A bit of news on the cryptocurrency market. The cryptocurrency market cap, that's everything included, Bitcoin, Ethereum, and all the other altcoins, reached a total market cap of $4 trillion for the first time ever. And the Bitcoin price pushed at one point to a new high over $120,000. It's standing a little bit below that now. I'm looking at the screen. It says $117,834 as I do this. And the Ethereum price is standing at $4,518. It was a little bit earlier over $4,600, which was again a nice, relatively high price. What have we got coming up? Well, again, on Monday at 9 o'clock in the morning European time, we've got the European PMI, Purchasing Managers Index data. It will show us if the economy is strong or not. And in the USA, the same thing for the USA at 14:45. And then at 3 o'clock, just before the markets open in the USA, we've got Mr. Trump will be meeting Mr. Zelenskyy in the White House. On Tuesday, we've got UK inflation and Canada inflation coming out. Wednesday, we'll see the Federal Reserve minutes of the last meeting. That's the one in which they decided to keep interest rates steady, and the one in which they had two dissenters. There's 7 people on the Board of Governors. 2 of them were dissenting. We'll perhaps learn a bit more when we read the minutes. And we've got in the evening European time, that's 8 o'clock in the evening, Chairman Jerome Powell of the Federal Reserve will be giving a speech at Jackson Hole. I think that will tell everybody what we're going to expect in the September FOMC meeting, mid-September. Will they cut? Well, the view is that they probably will. It's a very high percentage reading now. It was 100% expectation earlier in the week until we had that awful inflation news on Wednesday. So after that inflation news, the probability of a cut dropped substantially. Well, not substantially, a little bit. So it's still over 90% probability of a cut. But previously the question was, will it be 0.25% or 0.5%? Now there's no question of it being 0.5%. The thought process is it'll either be 0 or 0.25% cut. And those figures are derived from the CME FedWatch, which you can look up and see where it is at the moment. So we'll see what Jerome Powell's got to say on Wednesday. It'll be interesting, and it will obviously move the markets whichever way it seems to go. Thursday we'll have the US jobless claims, and Christine Lagarde will be speaking in the evening. And the Jackson Hole symposium will be continuing Wednesday, Thursday, and Friday. So thank you very much, ladies and gentlemen. That's my weekly report today. If you want to see more of these, please subscribe, like, and if you want to look at my LinkedIn page, you can actually see a downloadable weekly report which you can share with others. And by the way, while I'm just talking, those of you who are following gold, silver and gold mining stocks, I put out a video on my YouTube channel here about gold mining stocks yesterday. I picked and named 10 of the stocks that I think are going to really do well in the future. I bought them myself. So if you're interested in that, do look at the video on my channel, Clive Thompson, and it's all about 10 gold mining stocks from yesterday. Thank you very much.